talk about EPIC, which is the EPIC option, which is the solution for the broken tax system that we have in the state of Nebraska. Okay, it's a really bold and innovative plan. It maximizes local control. It's designed to benefit taxpayers, not the tax collectors. It's going to help low-income people because they're going to be treated so much more fairly. And we have national endorsements from 2 national economists. These are our champion legislators. Number 1 is Senator Steve Erdman. He's from Bayard in the upper left-hand corner. And then we have Senator Halloran from Hastings, Mike McDonald from Omaha. He is the former Omaha fire chief. Registered Democrat says, boy, this is going to be a big help to the low-income people in my district as well as across the entire state. And then we have Senator Robert Clements from Legislative District 2, Senator Tom Brewer, who is your senator up here, and Senator Dave Merman. He is a former dairyman from Glenville, Nebraska, which is just south and east of Hastings. He used to run a 500 head DHIA grade A herd, and he is the chairman of the Education Committee, and he's 100% behind what EPIC option can do for the state of Nebraska. So, specific examples, if the system's broken, this is in Dawes County to the west of you. This guy had a 78% increase in his valuation in 1 year. This is one of the oldest homes in the state of Nebraska. It's 125 years old. It's 1 bedroom, no garage, partial basement, located in Shadron. Second one is in Lancaster County. So the previous valuation was $441,000. He opened up his envelope and it said a valuation increase of $171,000 in 1 year, 38% increase. Totally uncontrollable, unsustainable. Third example is in Douglas County. This is western Douglas County in a recent subdivision that got started. This is a beautiful home. It's appraised at $1,116,000. Their valuation increase was $294,000 in 1 year. To the east of you in Pierce, Nebraska, this is a bowling alley. This increase was 148%. It went from $46,000 to $69,000. And then finally, this is an acreage north of Seward, Nebraska in Polk County. His increase was 44% on a, what was it, 3.7 acre plot. Okay, so the question that we have to ask ourselves is now on your next slide, which is, okay, so how much will the property tax valuation or the mill levy go up in 2024 and 2025 and 2026 and 2027 all the way to 2030, because we don't ever get a decrease. This thing is always, always, always increasing, okay? So our current system is unsustainable. Here's the picture of unsustainability. We have the moving truck, and who's leaving? Graduates with our brain drain that we've had for the last 20 or 30 years, whether it's from high school or after college, retirees. My wife and I could move 16 miles right straight east of where we live across the Missouri River, and we would drop our property taxes by $400 a month for the same value house. That's why people like us move out of the state of Nebraska. We say, why should we live here? We can't afford it anymore. And then farmers and ranchers are forced to sell out, because if you have a couple of bad years and you get behind in your property taxes and you don't get caught up, then they sell your farm or your ranch out from underneath you, okay? And so it forces them off their property. The current system is set up to where the state or the county government can send us tax increases without our permission. Never once has anybody gotten a phone call or a letter saying, hey, we've had an increase in our expenses here at the state level. Is it okay if we raise your taxes a little bit? We'd like a little extra money. Is that okay? No, the system is set up for the people who collect the taxes and spend the money. With EPIC option, the taxpayers are going to fund the government every time we decide we're going to buy a new retail product or service. Only groceries purchased for off-premises consumption are going to be exempt. There's going to be 2 constitutional amendments that all of you will have the opportunity to vote on next November. That's based upon the fact that we collect 160,000 voter signatures by July 1 of next year. That's how many we need in order to put it on the ballot. The first constitutional amendment you see on the left is going to eliminate property taxes, income tax, inheritance tax, corporate income tax, and Nebraska state sales tax. You will vote all of those out of existence. And those will be replaced with a consumption tax on retail products and services, and only groceries purchased for off-premises consumption will be exempt. This is what we all look like when we go to work in the morning. We're all bent over because we're carrying a heavy weight of the tax collectors and the tax vendors. With our new system, the big question that we'll ask ourselves either individually or as a couple is, okay, are we going to buy new or are we going to buy used today? Because there's no consumption tax on anything used. Today, you buy a used vehicle, used clothing, used furniture, you pay sales tax on it. With the new system, there will be no consumption tax on anything used. So this is going to be a big help for low-income people who tend to buy more used goods than they buy new goods. We've worked hard with our EPIC option to eliminate double taxation. So, as mentioned, there's no consumption tax on used goods or pre-owned cars or existing homes. There's no consumption tax on insurance premiums because they are an excise tax, and there's no consumption tax on any other item that collects excise tax. The big 3 in the state of Nebraska are gasoline, tobacco, and alcohol. And all those excise taxes are grandfathered in place, and they will remain. So in the state of Nebraska, once you build this in place, either the income is going to come in from the excise taxes or from the consumption tax. This is a really important document because people say, well, now wait a minute, Mark, if you're paying less tax and I'm paying less tax and my neighbor's paying less tax, where's the money going to come from? Okay, and so we use this as our example. As you see with item number 1, it's $11.7 billion is how much the total taxes are projected to be. That's the budgets for all of the state, all the counties, all the townships, the roads, villages, every government entity in the state of Nebraska. It'll take $11.7 billion in order to fund them. Letter B, $60 billion is what we project will be the retail transactions that collect sales tax. However, when you look at letter C as in Charlie, you'll see $75 billion is the long blue, yellow bar. That is the amount of retail sales transactions in 2026 that collect $0 of sales tax. And that's because of all the exemptions that have been garnered by lobbyists for the last 30, 40 years in the state. Then you look at letter D, you see $27 billion. This is the projected increased amount of retail transactions that our Beacon Hill Institute projects we will have. And the reason is because if you don't have to pay property tax anymore, and you don't have to pay income tax anymore, you got extra dollars in your checkbook. You got extra dollars in your HIP National Bank, and guess what? You're going to save some of that, but you're going to spend the majority of it. And a lot of that is going to be at retail, and so that's where the extra $27 billion comes from. So, what we're doing with our plan is we're going to more than double the tax base. We're going to broaden the tax base, and that's why the consumption tax is calculated at 7.5%. Current Nebraska sales tax is 5.5%. This will be 7.5% is what it's been calculated at. So you look at the letter E is now the new base. It's $162 billion. And that is the total of B, C, and D. All three of those added together now become this long green bar. So that becomes our tax base, and as you see with letter F, we only need to multiply that times 7.23% to get $11.7 billion. And so this whole system, this new way of collecting and now distributing tax dollars, okay, it's a revenue neutral transaction with our current system. The current system projects 11.7 billion needed for 2026, and our system says, yes, we can generate those dollars. Okay, husband and wife with 4 children, gross income is between $90,000 and $100,000 a year. On the left column, you see property taxes. They're currently paying approximately $4,000 a year in property tax. So they'd be living in a home that's valued at about $150,000. State income tax is $5,000. Personal property tax, we put that in at 0. Sales tax is $1,600 a year. And then their vehicle tax, this would be like a $50,000 vehicle that's now about 4 years old. Vehicle tax is $700 a year. So in red, you see the total tax they're paying per year, $11,300. We put a middle column in there so that you can go ahead and write in your own taxes when you go home, so you can see how much yours were. You can go back and look at your tax returns if you want to. But then we're going to look at the third column, which is the EPIC savings. So there's $0 in taxes now for property taxes, state income tax, personal property tax goes away, and the sales tax is gone. The consumption tax has been calculated for this family at $3,600 a year. This is a formula that we created with the Beacon Hill Institute's expertise. Professor Ernie Goss from Creighton University, who's a really big guru in our state as far as economics is concerned, has reviewed that formula and said that formula is sound and that formula is conservative. And so he agreed with the $3,600 was a good figure, and so now you see the potential savings is $7,700 a year. So what's a family going to do with that? We anticipated $1,000 of that $7,700 is going to go into the family budget. Why? Because of inflation. The price of gas, the price of fuel, the price of groceries when you go to the grocery store anymore. I mean, things have gone up a lot. So this family is going to have an extra $1,000 to put into their budget. We believe that they'll probably have to pay another $1,000 in federal income tax because there won't be any property tax to be able to deduct against their adjusted gross income. But they're going to end up with $5,700 per year to invest at just a simple 3% compound interest over 10 years at $62,000. That's a lot of money for a hardworking family in 10 years. And you multiply that times 20 or 30 years, that's either $120,000 or $180,000. That's a lot more money to be able to have to be able to go into retirement. Okay, we really want to emphasize that there is no consumption tax on business-to-business transactions. Okay? So, for farmers, if you're buying new tractors, tillage equipment, planters, combines, trucks, seed, fertilizer, chemicals, or center pivot irrigation systems, 0 consumption tax. Why? That's a business-to-business transaction. And it doesn't make any difference how your farm is set up. If you are a corporation, an LLC, a partnership, or a sole proprietorship, you're a business, and so there's no consumption tax on those new purchases. Same thing for ranchers, whether you're talking tractors, balers, loaders, feed, salt, minerals, vet supplies for the cow herd, no consumption tax. Then we start moving into the towns and cities. We talk about medical facilities, no consumption tax to build the building, or for the emergency room equipment, x-ray, MRI, CAT scan, or surgical room equipment, no consumption tax. And then finally, since construction services are such a huge dollar figure, we wanted to include them. So 0 consumption tax for the earth moving or leveling, the concrete foundations, paving the parking lots, any of the exterior finishes, or any of the interior finishes, no consumption tax. So everybody can smile a little bit on that because there's a lot of hardworking people out here that you'll be paying your fair share when you buy things at retail just like everybody else. One of the really important factors that Senator Erdman and our other champion senators wants us to emphasize in our town hall meetings is this. Once the voters vote in epic consumption tax next November, then those amendments can only be changed by another vote of the people. So what that means is the senators can't create any future tax category legislatively. It will take another constitutional vote of the people. So let's just talk about state income tax. It gets voted out next November. And then 5 years from now, 6 years from now, unfortunately, we lose a bunch of conservative senators and we have more of the tax spender senators who come in. And they say, oh man, it's time to bring back income tax. It's our time. This is going to be great. Well, they can pass a resolution that says they want to reintroduce income tax to the state of Nebraska, but then that goes on the general election ballot the next time, and now the people get to decide, are we going to have income tax coming back in, or are we not going to have it come back in? So what you're doing with this vote next November is you're putting yourself in better control of state spending than we've been in the last 80 years, 100 years. It's a big, huge step in the right direction for local control. Okay, you need to know that there's two constitutional amendments. The first one is LR 6CA, and I'll read it for you. The first one reads, a constitutional amendment to restrict governmental entities in Nebraska to imposing only retail consumption taxes and excise taxes. This amendment will eliminate Nebraska personal and corporate income tax, sales tax, personal and real property taxes, and inheritance tax. Okay, so that's going to be the first amendment that you will vote on November the next year, November 5th. The second one is the ballot language, a constitutional amendment allowing the legislature to authorize governmental entities to impose consumption taxes on services and new goods with the limitation that only grocery items purchased for off-premises consumption may be exempted from the tax. Okay, so you go to a grocery store today, you're going to buy meat, salad dressing, some soup, maybe some brownies for dessert, and a little bit of frosting. You're going to pay zero consumption tax because those are groceries purchased for off-premises consumption. But while you're there, you buy some paper products, paper plates, because you're going to have a picnic, paper napkins, aluminum foil, non-consumables, you'll pay the 7.5% consumption tax on those items. And when you get your printout from the grocery store, it'll list all the items that zero consumption tax are paid, and then here's the list of the items that you did pay consumption tax on. So you'll be able to see it very, very clearly on the receipt. Okay, we want to talk a little bit more benefits for your family. So for the people who are still working and raising your family, you're going to save your monthly property taxes. Therefore, you'll have lower home mortgage payments. If you live in an apartment or a house that you're renting from someone, from a landlord, you will have lower rent payments because there's no property or income taxes for landlords to pass through to tenants. Especially when you look at in the larger cities where you have an apartment complex, or maybe in a smaller towns you might have a 4-plex or an 8-plex. Okay, the landlord is not paying the property taxes or the income taxes off that facility. That's included in your rent. So if your rent, let's just say, is $1,000 a month, between $100 and $150 a month of what your rent payment is are the property and the income taxes that you're paying for the landlord. A lot of people who rent don't know that. So what's going to happen for the renters, especially in January, you have an empty HIP National Bank, and by December, after this passes, you're going to have extra dollars in there because your rent payments are going to be smaller. Okay, so now we want to make sure that we are not doing any damage here for senior citizens. So we have an example here of an individual that had $375,000 worth of total work done in 1 year. This is the year 2022 for a total knee replacement, physical therapy on the knee, 43 prostate cancer radiation treatments. Total copay for this individual was $4,100. So that times 7.5% would have been only $308.25 more had Epic option been in place. Because we will be responsible as individual citizens for the copay portion of our medical bills. If you're not insured, then you will pay on the entire $375,000. That was the risk that you were willing to take up front. Okay. Okay, and I just want you to know that these figures are accurate because this is my story. This was me a year ago. That's what I had done. So, it's going to be extremely affordable for Medicare patients. Okay, then we want to talk about for those people, citizens, hardworking citizens that have health care and they're buying their own insurance or paying for a portion of their insurance. Okay, they set up their own copay deductible, the maximum they want to pay in a year. It could be $1,000 a year, or $2,500, or $10,000, or it could be $20,000, whatever they want to set it up. This individual set it up for $3,600 a year, times 7.5%, $270 is all it would have cost for the consumption tax. So for a family, extremely affordable. Medicaid. Right now the co-pays are $1, $2, and $3. Copay for a hospital admission is $15. So 7.5% on $15 is $1.13. So the total cost is only $16.13 for a hospital admission. So again, you can see very, very affordable for Medicaid patients. Okay, we already know that there's big corporations that are coming in and buying Nebraska farmland, and there's a lot of people who don't like that. There's a lot of people who are concerned about it. I happen to be one of those people. But the good news is, with Epic option consumption tax, it's going to be more difficult for the big corporations to come in and buy farmland or ranch land because there's going to be less of it available for them to buy. Why? Because people are going to be able to continue to farm and ranch because they're not paying all those terrible property taxes. And then in addition, when someone dies, goes to heaven, and now their benefactors receive the farm or the ranch, since there's no state inheritance tax, okay, they're not going to have to sell off part of the farm or the ranch in order to pay the inheritance taxes. So this is going to be a big step, good solid step in the right direction for preventing big corporations or really rich people coming in and buying Nebraska farm ground. You live really close to the South Dakota border. Omaha is really close to the Iowa border, and so a lot of our opponents are saying, oh, it's going to be just terrible. All these people from Omaha are going to go to Council Bluffs, and Council Bluffs is going to get all the business, and the businesses in Nebraska or in Omaha are just going to dry up. And all the people from Valentine are going to go to South Dakota, and all the people in Sydney are going to go to Colorado. And so they keep putting out all that misinformation. So it's called border bleed. So we want to give an example of why Nebraska is going to win the border bleed war. We used a refrigerator as our example. Wholesale price $1,500 both for Iowa and Nebraska. The retailer adds a 20% profit margin on there. It's $300 a piece. And then in Iowa, they have property and income taxes that they have to pass through. That's $150. So their retail price is now $1,950. Sales tax is $136. And so their total cost in red ink is $2,086. In Nebraska, we have the same $1,500 wholesale price, $300 for the profit margin, but we're $0 passing through of no property or income tax that is passed through to the consumer. Our retail price is $1,800. Our consumption tax is $135, and so our price is only $1,935. So the refrigerator is $151 cheaper in the state of Nebraska than it's going to be in other states. So the reason you now see all these arrows pointing towards Nebraska from our surrounding states of Iowa, Kansas, Colorado, Wyoming, and South Dakota is because those citizens are gonna be coming across the border of Nebraska to buy their big picture ticket items here, because it's gonna be cheaper in Nebraska than it's gonna be in their state. So they'll be part of the $27 billion that we saw on the back page with letter D. That's part of that $27 billion. Senator Halloran from Hastings wanted to make sure, he asked that this slide be added because there were a lot of people that said, oh, since you don't have to pay consumption tax on an existing home when you buy it, but you'll have to pay it on a new home when you buy it, this is going to kill the residential contractor marketplace. And so he said, be sure you put the no in really big letters with an exclamation point, because that is wrong. Yes, you'll pay the 7.5% consumption tax on your house first time, and you'll pay it both on the labor to build the house as well as the materials, okay? But after 5 years of paying no property taxes, you'll have saved all of the money that you would have paid out in the consumption tax up front. We'll have a specific example to share with you. We'll talk about a $300,000 house, so that's 1,500 to 1,800 square foot, probably ranch style. $300,000, you add the consumption tax of $22,500, there's your new total. However, you're saving $4,500 in property taxes a year, times 5 years is $22,500 that you saved. And so you've now recouped all of the consumption taxes that you paid out. Most people who buy a new home live in it for at least 15 years. And so the next 10 years, years 6 through 15, you're saving $4,500 a year in property taxes. That's 45 grand in a decade. And so you're going to save a nice bundle of money. In red, you'll see it says EPIC equals stop renting from the government. As long as we have property taxes in the state of Nebraska, we never really own our ranch, our farm, or our home. And I've had some people in previous town hall meetings in my age bracket that say, Mark, you know, you can't really say that, that's not right. And so I would say, well, since you're in my age bracket, I presume that your home is paid for. Oh yeah, it's been paid for several years, okay. Well then I just challenge you. Don't pay your property taxes for 3 years and see what happens. And when they come, because somebody buys your tax lien and they come and kick you out of your house, you'll find out. I was renting from the government. I never owned my house, even though I didn't have a mortgage to pay. So that's one of the great things about this new system, is that we finally own our property. It's going to be wonderful. Okay, we want to talk about the economic boost that have been calculated by the Beacon Hill Institute. Okay, and the Beacon Hill Institute is an economic think tank that does all kinds of formulas for our types of propositions. And so they've seen what's happened in other states, they've recorded it. And so this is what they say their best estimate is will happen for the state of Nebraska. Population will increase by 1.9% the first year and up 2.3% every year after that to 2030. Personal consumption will go up 3.8%. First year it'll be up by 7.2% in 2030, 40 years later. New jobs, 47,154 new jobs first year, up to 58,000 new jobs in the year 2030. As you see the leapfrog there, the reason that he's there is because currently Nebraska is the 38th heaviest tax state of all 50 states. Okay? We will leapfrog from the 38th worst to the #1 least tax state. And so that's why people are going to move to the state of Nebraska, especially from the border states, is because they're going to find out, hey, even if we are employees, okay, and we're working for someone else and we make all of our money getting off of a W-2, we don't have any property taxes to pay anymore. And even if we're renting, the rents are going to be cheaper and there's no state income tax. There will be people moving from border states to Nebraska. In addition, I'm convinced that many of the people who were born and raised in Nebraska that chose to move to other states, once this passes, there's gonna be a lot of them that will move back. I used to be in sales in my life and travel to major cities on both the east and the west coast, and I'd find out from somebody that, oh, I'm from Nebraska originally. Oh, where are you from? Oh, I'm from Comstock, or I'm from Chagrin, or I'm from, Hyannis. And I go, well, how do you like living in Los Angeles? Oh, Mark, the traffic is unbelievable. And the cost of business of living here is just unreal. And overall, initially, it was a good move, but man, anymore, and the crime rate is so high. It's just, if I had a chance to move back, I would, okay? This is going to be their chance. And I believe that there are people, former Nebraskans, who own businesses that will bring them back to Nebraska when this passes. Okay, I want you to notice in the middle where it says the Nebraska stamp uses a dynamic calculator. Because our opponents are saying we're saying that we've calculated with Beacon Hill, the percentage is going to be 7.5%. They're saying, oh, no, it's going to be 14% minimum, or it's going to be 18, it could even be 20%. Okay, the reason that they're saying that is because they are using a static study. So, a static study is when you go to a Nebraska volleyball game or a Nebraska football game, or you go to a local game, you take out your smartphone and you go. And you take one photo. That's one moment of time in this whole game. You don't see anything that led up to that one photo. You don't see anything that happened after that one photo. So you're making all your estimates based upon that one moment in time. They're also doing it on legislation that Senator Erdman introduced 3 years ago. And we refined the bill a lot in the last 3 years. The reason why they are wrong is because we are using a dynamic study for our 7.5%. Okay, one of the other objections that we run into is, oh, Mark, we can't do this, we're going to lose local control. So let's talk about local control. It starts in the green at the very bottom. Your wallet or your Hip National Bank, your savings account, your checking account, your retirement accounts, all of that is local control. From there, the next step up is your vote for your county commissioner. So if you vote in and support fiscally conservative county commissioners, they're going to work hard to keep expenses down, and therefore the tax rates won't go up. Same thing true for public schools. Board members, if you work hard to support and help elect fiscally conservative members on the public school board, they also are going to work hard to keep expenses down. And then the next level is your state senator. And so while we work really hard everywhere to get as many conservative senators elected as possible, you have a Cherry County Senator Brewer, six-time winner of a Purple Heart. What a tremendous guy he's been for you. Just done phenomenal work. So, what I want you to do, somewhere on your document, I want you to write the number 17 with a circle around it. 17 with a circle. And the reason that's important is because it only takes 17 no votes at filibuster in the legislature to kill a bill. And that includes a budget bill. Okay? So, if we have a case out here where Legislative District 43 that you're living in is being treated unfairly, okay, or District 44 where you live, then you get a hold of your senator and saying, we are at the short end of the stick, this isn't fair, Senator, you gotta go to work, and you gotta get other conservative senators to vote no to kill this bill at filibuster. Now the good news is, there's 23 senators that represent Greater Nebraska. Greater Nebraska is the 90 counties, 90 counties, where agriculture is one of the largest employers, okay? Farmers and ranchers, etc. Greater Nebraska is all of Nebraska except for Douglas County, Sarpy County, and Lancaster County. Okay? We only need 17 of those 23 senators to get together to vote no to kill a bad bill, including a budget bill. Okay? And we've done a tremendous amount of work here. This last election was really, really good for us. Okay? Our EPIC option works just like the Electoral College does at the federal level. Population makes no difference. It's the geographic area of the political entity. And in Nebraska, we're set up with counties. And so this whole plan is based on counties. And every county has an equal vote. So, Blaine County, which has the least number of citizens, has just as much power as Douglas County, which has the largest number of voters and citizens, because that's how this is set up. Okay? So this is going to do more to bring local control back to greater Nebraska than anything else that we could have done. You need to know that there's going to be some downsizing in government. Okay? First of all, there will be 93 fewer county assessors, because once property tax goes away, we no longer need tax assessors and any additional staff members that they have. And in Lincoln, we no longer will have the Department of Income Tax. Okay, so all of those employees will be looking for a new place to work. Some of them will be able to apply for the new consumption tax division, but the senators tell us it's going to take a lot fewer employees to run consumption tax than it did the income tax. You're going to have 10 new people that are involved in the political process here. The first one, this is a map of the county equalization and review board regions. Okay, so you are in the Fort Robinson area, as you can see, and you see the rest of the map. Local control. I believe you have 3 county board members in Cherry County. Okay, so that's your local control. Out of those 3, they're going to decide who's the one county commissioner who's going to be on the board with the other 1 county commissioners from the other 18 counties, and they're the ones who are going to interview and hire a regional representative. And the regional representative is going to look at all of the budgets for each one of the counties to make sure that they are filled out properly in the new form. You're going to get money from 3 different buckets coming into your county. The first one is the county trust fund. And you see that the regional representatives, they review and consolidate the budgets, but they have no authority to manage them. Okay. So this will fund all 93 county budgets, as well as the budgets for all the local units of government. So the volunteer fire departments and the county sheriffs and everybody else at your local county, they will get their operating funds from the county trust fund. The state treasurer pays directly to your county's bank account, and then your county treasurer pays to the bank accounts of each one of the individual entities. This is normal operating budget that you currently create every year. In addition, you'll get a county stabilization fund. Okay, and you see the 4 other areas that you are going to fill out that will allow you to collect some extra dollars if you deserve it. So basic services score, road score, county hospital score. The roads and the county hospital scores are really important for greater Nebraska, because you have many more miles and you have a smaller number of voters and taxpayers, and so your cost per mile for maintenance and everything is much higher. I mean, in Omaha and Lincoln, we got a lot of people, but we got a lot of miles, but we got a lot of people that are there. So that's going to help you in your budget process with your road score. And then for any county that has, there's only 1 medical facility in our entire county, and it's paid for by county taxpayer funding, that's where you'll fill that out, and that's where you'll get the money to continue to do that. Then you have the county rainy day fund. This is the 3rd bucket of money. This is designed for counties that are experiencing losses or damages to county-owned structures due to fires, natural disasters, other calamities. So you have a tornado that comes through Cherry County and wipes out your courthouse, you're going to have a new courthouse. This is where you'll get the money for it. You'll get funds to rent a temporary workspace, and then you'll get your money to be able to rebuild the structure. Okay. I can tell you that the implementation bill, LD 79, is 80 pages long. What we have done with this, if you'll take the back page and open it up, you'll see you have two flow charts. This is the left-hand flow chart. We worked hard to take 80 pages of material and condense it down to one page and put it in the picture format so that you could see visually how is this going to work. The most important boxes are the two green boxes at the bottom, because that shows you how the tax money is being collected and sent to the Department of Revenue on a daily, weekly, monthly basis. And then from there, the bottom box, it goes up to the state treasurer. And the state treasurer then disperses the funds in the three black boxes that we just talked about. Those are your three buckets. Normal operating budget is your county trust fund, stabilization fund for your roads and your hospitals, and then the rainy day fund to build the new facility. How does the budget process work? All 93 counties in the upper left-hand corner, you create your budget just like you're creating it today. You have total control of your budget just as you do today. And then from there, it goes to the first blue box, which is the regional representative for the Fort Robinson region, and his or her responsibility is to make sure all of the counties filled out their information properly. And then from there, it goes to the legislature for processing. The budget always starts out with the responsibility of the governor, and then it goes to the legislature, and that's where the number 17 is so critically important, because if you feel that your county is not being treated fairly, you have to call Senator Brewer or whoever his replacement's going to be in the next election, and say, hey, we're at the short end of the stick, this is not fair. Senator Brewer, go get 16 other people, senators, to vote no, kill this bill so that we're treated fairly. So that maximizes the local control that you have coming in. That's your county funding. You will also have 5 regional representatives. You'll have a second one for the Fort Robinson, and this is all about public schools. Because there's a major, major concern in the small town villages, in a town of 500 or 300 or less. Oh my gosh, we lose our school, man, our town just really declines and goes downhill. I want to emphasize, there is absolutely not one single word in the 2 constitutional amendments I read to you, or the 80-page document, which is the implementation, okay, that says anything about merging schools or closing schools, okay? So if you hear anybody who says, oh, this act is going to be terrible because they're going to force our schools, you can just challenge them. Go get the bill, read the bill, bring the bill to me and show me where it says that they can start closing and merging schools, because it's not in there. That's all local control. It's for you folks. Each one of the villages is going to have to decide. Every public school system, I should say, it's their decision as to whether we're going to remain a vibrant public school or we're going to have to merge with somebody else. Nobody in Lincoln's going to force that. That is a decision that's going to happen right there in your public school. So, you'll have a regional representative, and they will go through, and you're going to get 3 buckets of money for your public school. Again, the regional representatives review and consolidate the budgets. They don't have any authority to decrease a budget. This is going to fund all 244 public schools. The school budgets are based on a 5-year average plus a 2% increase, and the state treasurer pays monthly with direct payment to each school district's bank account. We had 5 superintendents that helped us create this, and they were all thrilled because they're going to start getting money on a monthly basis. But right now they get 2 bursts of money that come in because it's all tied to property tax. They said it's going to make so much easier to create and run a budget when you got money coming in on a monthly basis. They'll create their budget on a monthly basis and get it reimbursed. Okay, your second bucket of money is called the stabilization fund. And here's 5 ways that you can get additional money. Special student needs score, transportation, technology, textbook, and poverty score. First one, we want to make sure that every child who is mentally or physically handicapped gets all the money that they need for their education, because the teacher-student ratio is so much smaller when it comes to special needs students. We understand that. In addition, that's where the cities in Nebraska that have a meat processing plant, they need extra dollars. And the reason is because a high percentage of the people who work there are immigrants, okay? And so like in Omaha, there's 26 different languages that are spoken in the Omaha public schools. 26 different languages. So English as a second language is extremely important for those students so that they learn English, become inculcated in our culture, and become really productive citizens because they can read and write and go to college, do whatever they want to do. Well, the same thing is true where we have a meat processing plant as we would have in Crete, Madison, Nebraska, Lexington, Nebraska. A high percentage of the people that are there are immigrants. And so they have a need for ESL teachers in those public school systems. That's going to make sure that they have those funds. The next one is going to be really important for all of greater Nebraska, the 90 counties. It's the transportation score. Okay. I can tell you in Omaha and Lincoln, you can take a school bus, drive it a little ways, start loading up students, and in 1.25 miles, you've got 48 students and you're headed to school. 1.25 miles here, you haven't even gotten out of town hardly. You haven't picked up your first student. So the cost per student in greater Nebraska is so much higher than it is in the metropolitan areas. So this is going to be a way for you to be able to have your budget really enhanced through Epic Option because of number 2, the transportation score. And then if you need new laptops in your school or a server, okay, technologies, how you will get that funded. You need new textbooks. And for the public school systems that have a high percentage of low income people, poverty people there, they will have an extra way to get some extra funds, okay? You may want to write on your form T-E-O-S-A, again, T-E-O-S-A. That's the current funding from the state government back to the public school system. I can tell you that you have been on the short end of the stick in greater Nebraska because you get like 3% of all the TOSA funds spread amongst all the BC, D1, D2 schools, and the Class A schools get 97%. And it's because of the lobbyists. Okay? This is going to eliminate that problem. So you will be so far ahead financially in your public school system, you won't believe it. Okay, and then you need a new school. This is the 3rd bucket of money. This is where it'll come from. It'll take a vote of the people, and once you vote yes, we want to build a new school, okay, then it goes into your funding request, and then the money will come, and then instead of you having a 20-year bond that passes locally to pay for the school, and to build the school, and then you're going to pay for the school over a 20-year period of time, now you're going to pay back over 20 years here. All right, and so you have a flow chart on the right-hand side of the public school funding, and it looks very similar to the county funding, with the 2 most important rectangles being the bottom 2, because the money's coming in on a monthly basis to the Department of Revenue, and then it gets forwarded on to the state treasurer, and then you see the 3 green buckets to the right-hand side. Those are the 3 buckets of money that we just discussed. The money comes right back to the individual public school systems, and the school board will be responsible for creating the budget just like you do today. And you folks vote for your public school board members. So, local control is built into this step process as much as we can. So, every day is precious when it comes to educating the voters. We need the 160,000 signatures to submit by July 1 of next year. Those go to the Secretary of State, and then he will work with all of the county clerks or the county election officials in every county to verify the number of valid signatures that are on the petitions that we have collected. And then he will have to say within 2 months, the statute is he has to say yes or no, do we have enough valid signatures? And then it'll go on for the general election ballot November 5th. We really only need 125,000 valid signatures, but unfortunately not every signature that is collected is valid, because some people think they're registered voters and they're not. They were registered in another county and then they moved to this county, and so they think they're registered or not. Or they moved their residence and so they wrote in their new residence, but they haven't changed their voter record and say the old address is there. That signature gets kicked out. So we need 125,000, we're collecting 160,000, which is a 20% buffer. It's a lot of work to collect 160,000 signatures. I just want you to know. We've got a lot of volunteer circulators and we're looking for more.